This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks continued their winning streak last week as the market sees a potential return to normal following years of turmoil. The S&P 500 rose 1% in the Thanksgiving shortened period between Friday, November 17th and Friday, November 24th. It was the fourth consecutive positive week. Perhaps more importantly, Cboe's Volatility Index, or VIX, fell below 12.5. It was the lowest reading since January 2020, shortly before the coronavirus pandemic triggered one of the most dramatic sell-offs in history. Stocks recovered from the crisis as the Federal Reserve unleashed massive stimulus. Still, in a sign of lingering fear, the VIX mostly remained above 18. The anxieties were confirmed in 2022 as inflation surged and markets crashed. Conditions have slowly improved this year and got significantly better as November began, as we described at the time. And now the VIX is back where it started. Could that mean things are finally returning to normal after almost 4 years of shocks? Consider the case of autos. The pandemic halted production and drove costs higher in 2020 and 2021. But last month's inflation report showed new car prices down the most since August 2020. Kelley Blue Book separately noted that inventories of unsold vehicles are growing amid weak demand. The report added that dealers may need to offer discounts into year-end. Energy prices also remained under pressure. That was another area that jumped coming out of the pandemic, but could now be returning to normal. S&P Global said that private sector employers cut workforces for the first time since June 2020 because of subdued demand conditions and dwindling backlogs. That's noteworthy because it's an early reading on November, 1 to 2 weeks before similar numbers from the Institute for Supply Management and the Labor Department. S&P added that prices rose at the slowest pace in almost 3 years, while manufacturing firms had greater efficiency. Those points could also argue that inflation is finally coming under control. Last week saw money shifting toward parts of the market that have mostly lagged. Healthcare led the bounce, supported by companies like Agilent Technologies, Insulet, and Dexcom. Better than expected results lifted Agilent. Insulet and Dexcom continued to rebound from long-term lows, following big drops in recent months. Other outperformers included transportation, materials, and global stocks. Gold miners rallied as continued dollar weakness increased the appeal of precious metals. Gold futures also had their highest weekly close since July. The price action may suggest investors are starting to rotate away from mega-cap growth stocks, which have dominated performance this year. Traders may watch for signs of the trend continuing, because lower volatility sometimes helps smaller stocks. Two mega-cap growth stocks had important news last week. Nvidia reported strong quarterly results thanks to AI demand, but the semiconductor giant fell after Reuters reported it will delay sales of some advanced products to China. Microsoft also flirted with new highs after successfully navigating a boardroom fight at key partner OpenAI. Amazon.com could be the next big name, with AI news expected at its cloud computing conference this week. Now let's chart the market. The S&P 500 ended last week at its highest level since mid-summer. The index is entering a price gap from August 2nd and is just 1% from its high for the year. Wilder's Relative Strength Index, or RSI, ended last week in overbought territory. That could make some chart watchers expect a pause or pullback. Still, the sharp drop in volatility and recent improvement in sentiment may limit drops. We'll now turn to the week ahead, which brings a few important company events and a little bit of economic news. Amazon's cloud computing conference starts today. Traders will likely watch for news about AI features or growth estimates. New home sales are also due, and CrowdStrike reports earnings. Revised gross domestic product follows on Wednesday, along with results from Snowflake and Dollar Tree. Thursday brings the Personal Consumption Expenditure Price Index, an important inflation report. Initial jobless claims are also due, and Salesforce.com reports earnings. Friday is the first day of December. It features ISM's manufacturing report and construction spending. Thanks for watching. Please visit tradestation.com for more.